Welcome back to Countdown. I'm Anna Edwards.
And I'm Mark Barton. Time in London is 6:43. Just 9 days remain until the US hits its borrowing limit if lawmakers don't reach a deal. That means the D word is being thrown around a lot. Default. Yannick Naud says it would be more of a technical default than a full one. Yannick is a portfolio manager at Glendevan King Asset Management and joins us now. Yannick, good morning.
Good morning.
And of course, there was a technical default, wasn't there, back in 1979?
Yes, back in spring 1979. In fact, the government missed a payment of a couple of T-bills. It paid back plus the principal later on. I think there were class action and they had to pay some penalty. It was not a great thing. Economists predicted at the time that it increased the cost of borrowing for many years after that. So it's not a situation you want to repeat. Having said that, if we look at the short part of the T-bill curve, I mean, T-bill, US T-bill maturing between 24th of October and 30th of October, we see the yield going up quite sharply. It was around 0% to 0.1%.
Now it's gone up to 0.18, hasn't it?
0.18, 0.15. At the same time, the LIBOR is going nowhere, so it's a pure indication about the riskiness.
Are these early indications of worry emerging in markets,
yes,
Yannick?
I think so. I mean, if you look at other markets, for example, the equity or the bond market, the market are less bad today compared to 2011, where we had the same problem with the debt ceiling. But in terms of T-bill, we're back at exactly the same level, 0.18. So in fact, the T-bill is telling us that the situation is probably more problematic than what the equity market or the bond market thinks it is.
So this is fascinating then. So does this signify that the markets, investors, are level-headed enough to make a distinction between a short-term or technical default and something bigger picture? Because you would worry heading into any kind of default that the market won't distinguish between short-term or technical and something on a bigger scale.
I'm not sure it's a good news. I'm really not sure it's a good news. I think it's a possibility. So we have to. It's something that we have to be aware of. It's a possibility. Imagine even if there's a technical default within the grace period, the market is going to be extremely volatile between the default date and if it gets repaid even a couple of days after. I mean, imagine what will happen in the market during that period, because even if the government promised they will do it, they will pay it, and the uncertainty will be incredible.
Yes, it will. So it could be, yes. But Yannick, you reminded me this morning that there is another country, another democratic country, that has a debt ceiling, and they do things very differently.
Exactly. Denmark as well as a debt ceiling. They are not using it as a political tool. Therefore, in US, for example, they increased the debt ceiling 91 times in 40 years. In Denmark, only one time, in 2010. Nobody really heard about it back in 2010. They doubled it, more than doubled it, from 950 billion Danish krone to 2 billion.
Why does it not become a political tool?
Well, I mean, they increased it because the debt was around 75% of the ceiling, and they were thinking the room to maneuver was too tight.
Oh, I see. So you start the conversation earlier, basically.
Yes. No, I think I mean, in US, it's a political tool. It's a way for the Congress to keep the government at check. I mean, the tool by itself doesn't have enough meaning, because if the economy is growing, I mean, there's no need for debt ceiling.
We don't know if the economy is growing yet, because there's no data. Sure. How problematic is that proving? No data.
Well, today again we're going to have one data out of or something like this. The trade balance will not be published today, and there will be this week many reports like that. And on the top of that, if they don't start to work on publishing the report for next month, we will probably have partial report or poor quality report.
So once they come out, it's all old news. So ciphering through it becomes
well, it's an opportunity.
Tricky.
It's an opportunity for a private company that provide this kind of report.
So what are you watching now? What bits of data are you watching?
Gallup. I mean, there's the daily consumer indicator published by Gallup. It's been going down quite sharply in the last few days. It's not the best indicator in terms of the quality of data, but right now it's what we have.
It's worrying, and it supports the theory that the shutdown is going to have some kind of economic impact, point whatever of a % of GDP per quarter.
I mean, technical default or no technical default, volatility always has an impact, because everyone will price assets as being more risky than they were a week before. For example, today we have the APEC summit. I think China is lending 1.28 trillion to USA, Japan 1.14 trillion to USA. Whatever happens in next week, I hope the situation will be resolved very quickly. They will think twice before investing a large part of their reserve into US T-bill.
So instead they invest in?
Well, instead, if you're a dollar investor, there's not so many liquid market. I mean, you could invest it in very high quality corporate bond, for example. On our side, we think that in the current environment with a high volatility, it should be better for credit, for corporate bond, convertible bond instead of equity, and we will favor Europe compared to States, both in terms of equity and in terms of corporate bond. Equity multiple are much lower in the Euro stocks. I think it's 12.5 times.
Based on valuations,
yes,
there, not to do with the politics and the shutdown and the debt ceiling. Both.
You get both the better valuation usually, and in fact you have less uncertainty.
Don't tell me there's less uncertainty in the European political situation.
Well,
makes a change.
I mean, even Berlusconi did the right thing last week. So, you know, if Berlusconi can do it, I'm sure they can do it as well in the Congress.
Got to ask a question about Monsieur Hollande,
yes.
who I gather is just a point away from matching the lowest ever approval rating. Is that right of a president? Did Mitterrand in 1991 dipped 22%? I think Hollande, according to your notes, is on 23%. So he's almost the most unpopular.
They were polled on the end of around end of September. Right. It was at 23%. I think other poll could be slightly higher, but all in all,
still French debt. People keep buying it, you know?
Yes, I think in this current environment, the spread between OAT and Bund is very stable. It's around 0.5, 0.55%, and there's no real reason for the spread to widen tremendously. There's not very, in terms of a pool of very liquid bonds in Europe, OAT is very, very liquid.
Yannick, thank you very much. Yannick Naud, Portfolio Manager at Glendevan King Asset Management. He will actually stay with us for the newspaper section. That's coming up next.
Now, coming up, we're going to take a look back at the past century to see some of the best inventions.